Join us online for a unique virtual conference experience, Life Cycle Planning, What Goes Around Comes Around, taking place on September 19th, 2023. Unlike other events that primarily cater to a select few, this conference is designed to provide strategies that are applicable to a broader audience. Irrespective of age, geographical origin, or the position on the wealth spectrum, attending this event will equip you with valuable insights to immediately enhance the value you offer to clients. Register today at iwicentral.org/LCP to secure your spot.
We're proud to welcome you to the Exceptional Advisor podcast series, brought to you by the Investments and Wealth Institute. This series aims to help you to better serve your clients, differentiate yourself from the competition, and enhance your ability to communicate those differences. Hi, I'm your host, Bob Powell. So Todd, welcome to the podcast.
Hi, Bob. Thanks for having me here. It's a pleasure, and I'm honored to be on your podcast today.
Yeah, it's a pleasure to have you on the podcast. And before we get going, for the benefit of folks who may not be familiar with you and your work, do you mind giving us an overview?
I am currently the Piggott Professor of Entrepreneurship at Gonzaga University, and I came there in 2010 to create a brand new program, a university-wide entrepreneurship program. But I've also been into investments my whole life, and so in the back of my head, I've been doing things related to investments since I was probably about 21. So that's where Warren Buffett comes into play, and we'll be talking about that today.
Yeah. So a little bit more about your background. You've got an MBA from University of Wisconsin in Madison. You're a Badger.
I'm a Badger, yeah. I went to Wisconsin and got an MBA there. And after I got my MBA, I went down to the Chicago Mercantile Exchange and applied for a job there because I really wanted to work in the markets. I was fascinated with the markets, and they told me that they would start me out as a runner. This is back in 1989 when there was very little technology going on, and so I would be running back and forth to the checker, and the checker would be sending the order up to the trader up in the office. So, you had that whole thing going on there. And they were only going to pay me $7 an hour. And I was paying outstate tuition at Wisconsin, and I had a lot of student loans. I just couldn't afford to do it. Even though I wanted to do it, I couldn't do it. So that's what kind of led me on to seek another avenue in my life at that time. And I ended up going on and getting a PhD, actually in entrepreneurship. There were only 2 schools that offered it at the time. And I got the PhD in entrepreneurship, and there were only 6 jobs in the country that were open because I was kind of ahead of my time. I was an entrepreneur within academia, and unfortunately, I didn't get one of the 6 jobs coming out because all the people that already had jobs were applying for those jobs, and they got those jobs. And so I ended up going to a school in North Carolina, University of North Carolina, Charlotte, and they allowed me to teach small business management and strategic management. But I pretty much treated small business management like entrepreneurship when I was there. So that's how I started out my career in academia. It was by going there, and it wasn't even really an entrepreneurship job because that's really what I wanted to teach was entrepreneurship. And I ended up eventually going in that direction, and that was my whole career was in entrepreneurship and Warren Buffett.
So, yeah, I mean, I take it, obviously we can talk more about the book in a second, which I should mention has just won a National Business Book Award. Is that right?
Yeah. Yeah, I actually, it was the 3rd best business biography in the country. So it wasn't the top one, but it was the 3rd best.
Yeah, congrats. That's fantastic.
Yeah, I was pretty excited about that. I put a lot of work into that book that I'll be talking about here in a sec.
Yeah. You mentioned entrepreneurship, and we'll talk more about the book. But when you think about Buffett, something I didn't realize about his entrepreneurial path was that he cut his teeth selling gum door to door during his childhood, which I don't think many people know. Is that right?
Yeah, the thing that really surprised me the most in the book was as he was a kid, really young. He was born in August 1930, right in the heart of the Depression. And when he was almost 2 years old, his father lost his job and lost the family's money. And so they were, they didn't have anything. And he went to his father. His father had a grocery store, and he asked him for a job. And his father said, "I can't afford to hire you, but I can give you food on credit." So he ended up doing that. In the meantime, Warren's family, his mother was freaking out. She already came from a family history of mental issues, and she started taking out her frustrations, I guess is a better word, on her kids. Mm. So they would wake up and they would say, you could tell by the tone on her voice what kind of a day it was going to be in the morning. And, Warren would hear that he was worthless, as a kid. And his oldest daughter took a lot of the brunt, Doris, of the abuse. And so, it kind of irritates me when I hear people saying, oh, he's had everything, he's a rich guy, da-da-da-da-da. But, you look at his background, and that's probably, in my opinion, what drove him. Yeah. That kind of background growing up and being told that you're worthless, and boom, not too far after that, he started being an entrepreneur.
It's so interesting. I'm in the middle of reading Angela Duckworth's book, Grit, which I have never read before. And in it, she talks about her dad also criticizing her as saying, you're no genius. And then she goes on to win the MacArthur Foundation.
Yeah.
Genius. And then goes on to say that it's all about grit, that it's not about your smarts. It's not about your money. It's about your grit and your perseverance.
Yep. Grit and perseverance. That's a great point that I learned about Warren Buffett. Were both of those things. And that and creativity, how much he values creativity and thinking outside of the box. Yeah. He loves people that do that. Yeah. One of the first times I brought students to go visit him, and the first time that we visited him, he said to us, and he was looking right at me when he said this, he goes, the most successful business people that I've met in my life are people that have the most business experience that don't necessarily go to these high-powered schools. I won't name them, but he mentioned some of them. But there are people that have the most business experience that think way outside of the box.
Yeah. Well, I think you sort of hinted at it, but for posterity, let's talk a little bit about what inspired you to write the book about Warren, and what do you hope readers, including those who are listening here, will take away from it?
Well, I'm hoping that people all over the world, typically academics write to a small audience, but that's something that I didn't want to do. I wanted to write to the world. And I wanted to share with them on what they can do to become more financially literate and financially self-supportive so they don't have to rely on other people, and how to be a better person. A lot of the rich thoughts that Warren has given out throughout the years, I include in the book. Yeah. And the people that have influenced him, like Dale Carnegie. I talk about him in chapter 2, and some great quotes in there. One by Benjamin Franklin, when he talks about, I will speak no evil of any man, only good, which is one of the reasons why he became one of the best ambassadors the United States ever had.
So let me ask you. I mean, he's obviously well known. There are numerous books written about him. Talk about the new perspective or insights that you bring to the table in this new book.
That was a challenge in writing the book, because there have been quite a few books that have been written on Warren, and I waited 9 years before I actually decided to write it, while I was involved in a lot of different activities with him. I back in 2007, my cousin Steve Nogg told me that they were inviting universities to Omaha to go visit Warren Buffett for a day, and you'd go visit two of his subsidiaries, Nebraska Furniture Mart and Borsheim's, which were both, the largest private furniture and jewelry stores at the time. And you got a 2.5-hour Q&A with Warren Buffett. Then you went out to lunch with Warren Buffett, and then he took a picture with everybody individually, and as a group. So I got rejected the first time that I applied. The secretary said that the list is years long. Don't even bother to put your name on the list. Even though I knew his son, I went to high school in Omaha. I'm from Omaha. I probably should have mentioned that. And I went to high school with Peter Buffett at Omaha Central High School, which was an open public high school. It was very diverse, which says everything about Warren Buffett. He didn't go to this private academy, with high cost and all. Warren sent his kids where everybody else was going, and Peter was great. Peter was a great kid. He's a couple years older than me, and I hung around with a couple of, guys that were older than me that were a pretty bright group, and we ate lunch every day in the cafeteria, and Peter was with us, and you would never know that his dad was Warren Buffett, because back then, that was 1976. Right. Nobody knew Warren Buffett. I mean, Warren Buffett had a lot of money. He probably had 25 mil, all right? But that's not wealthy, as they say today, right, Bob?
No, not much wealthy.
Right. And, but, you would never have known. I'd never heard any of my friends say anything about, hey, Peter's father's Warren Buffett. Nobody ever said that. And Pete never acted like he was anything special. And he had ripped jeans, and he wore a baseball cap, and he was into music, and he was into photography. He was on the yearbook staff. Yeah. But he was just the nicest guy in the world, just a super nice guy. And that was, kind of my initial introduction to the Buffett family was via Peter Buffett. And my brother David knew Howard Buffett, or they called him Howie, and he played handball over at their house. And I interviewed Susie Buffett, who's, the oldest, for the book. Yeah. So I have quotes in the book from Susie Buffett. That was kind of fun to get some background and introspective about, the Buffett family and her relationship with Warren.
Yeah.
So that's kind of a little bit of a background. And in 2007, I tried to get invited to go visit Warren at his corporate headquarters in Omaha, Nebraska. I got rejected. I wrote a case study on Buffett because I wanted to learn as much as I could about Warren. Over a 2-year period, I got accepted at an academic journal. And then I had this epiphany of, why don't I just send the case study to Warren? Maybe he'll invite us, because I did something outside of the box. Because that's the way my mind was working. And I thought, well, maybe there might be a possibility there. Yeah. And sure enough, 10 days later, I got a letter from him inviting me to Omaha that November, the same weekend that he bought Burlington Northern Santa Fe Railroad, and all these people were chasing him around trying to interview him.
Yeah.
But he didn't want to have anything to do with them because he was with the students. He cared more about Warren Buffett said that he would rather be a teacher. If he was not doing what he's doing today, he would be a teacher, or professor, whatever.
Yeah. Well, he himself had a pretty good teacher, if memory serves.
Yeah. Well, his father was. He'll tell you his father was the best teacher.
Yeah. Oh, really? Not.
I mean, Benjamin Graham was great, but if in his office the only picture on the wall is his father's picture, but he did name his kid Howard Graham Buffett after Benjamin Graham, his middle name. So I took a group of students to go visit him, and I had lunch, and I sat right across from him, and I had the first question and really the only question that I had of Warren, because I did this case study on him and I knew all about him, It's not like I had all these great questions to ask. And I said, how do you value a company, Warren? And he just kind of looked at me and he said, the discounted cash flow. That was it. And I thought, no, there's got to be more to this story than the discounted cash flow. And so I asked him again, and he said, the discounted cash flow. He repeated it. So I knew better than to ask him again, because I knew he would say the same thing, and he'd probably think I was an idiot. But those are the two things that Warren Buffett said. He's not a big fan of higher education. He abuses it. Him and Charlie do all the time.
Yeah.
And he says you only need 2 classes to be a successful investor. How to value a company, and a class on behavior in the financial markets, or behavioral finance, or whatever they call it, behavioral economics.
All of the above, yeah. So actually, what more about that? I mean, you have a whole chapter on behavioral biases, and I guess what can we learn from how Warren applies behavioral bias, or how he looks at behavioral finance or economics and applies it to his investing, and what we can learn from that?
Well, both him and Charlie definitely say that that's the most important thing when it comes to investing, and they call it temperament, and I call it behavioral biases. And I'll tell you, I am so glad I wrote that chapter. It has helped me enormously with my own investing and realizing when I'm doing wrong. I have caught myself doing stupid things several times, even since I've written the book. And I've caught myself, I'm with the herd today. I'm thinking about being with the herd. Do I want to be with the herd? Or recency bias is another big one, and loss aversion. Loss aversion is a bad one for me. If you lose money, it feels twice as bad as it does making money. And so that chapter is so valuable. And it was really the last chapter that I wrote in the book. And I spent a lot of time on that chapter.
Yeah. It seems like, there's the world has turned its attention. The financial advisors are now thinking about behavioral biases, right? Whether it's recency bias or overconfidence or you name it. It's sort of like the thing that they have to learn in order to help their clients manage their, at least accept what they're doing with the money that they manage, right? Like, why are we doing this when it's like the opposite?
Yeah, it's not just the investor, it's the investment professionals have to deal with all that as well.
Yeah. Yeah. How do you think it is that when you think about, obviously loss aversion, Daniel Kahneman, Tversky, how is it that Warren, with the size of the portfolio that they manage, him and Charlie at all, that when they deal with losses, that how do they deal with loss aversion?
I think their premise is if you can't afford to lose 50% of your investments, you shouldn't be in the market.
Yeah.
So they just assume every so often their portfolio is going to go down 50%. It's gone down 3 times 50% since they've formed Berkshire Hathaway. I think, what has that been? A little bit over 50 years, I think.
Yeah.
52 years.
Yeah.
So they just assume that, and they're in it for the long term. And, they'll probably buy when it's down.
Yeah.
And stay within their circle of competence.
Yeah.
Buy, that would be a good time related to margin of safety that they talk about all the time, right?
Yeah. Yeah.
And
do you think they have the advantage, Todd? Like, for instance, with an advisor who's managing a client's portfolio, ultimately it's not an endowment. They have to at some point draw down the portfolio. And in the case of Berkshire Hathaway, it's more like an endowment where there is no drawdown to come from this portfolio, and that's a luxury that they have in some ways.
Yeah, I mean he's got all this money, and I mean his drawdown is charity every year,
sure,
that he gives, and if he hadn't have given all this money already to charity, he'd be the richest man in the world.
Yeah.
I read that the other day.
Yeah.
But
and by the way, he doesn't plan to give any of it to his children, if I recall correctly. Or not a lot anyway.
I talked to Susie about that, and she was very careful about what she said. About that. Each of the kids got $2 billion. I think it was 10 years or so ago, and they started their own foundation.
Yeah.
And they all focus on, Peter is really into women's issues, and abuse of women and things of that nature. He's got a whole list of things that he's into, and Howard's into farming.
Yeah.
So he goes to Africa, and Susie's into education, a lot of it. But they're probably not going to get much, I wouldn't think. And I believe, I haven't heard anybody say this, and I haven't read it anywhere, that Warren is managing their money in these. Oh, it would make sense, right?
Sure. Yeah. Yeah.
I mean, who else is going to manage the money? Why not have the best investor in the world?
Why not
manage your foundation money?
Yeah.
But So it's a lot easier not to have this behavioral bias, the laws of aversion, when you've got $100 billion hanging around, right?
Yeah.
And you don't have to worry about retirement. I'm going to retire in 5 years. I can't lose any money.
Right.
So you've got that issue going on inside your head. Well, Warren doesn't have to worry about that, but the common person does.
Right. Right. It's a little more significant. Yeah.
Hell.
Talk about, obviously you mentioned discounted cash flows, and one of the key themes of his investing career has been about the importance of value investing. Can you explain what that means and how he applies that strategy? Is it solely because of discounted cash flows, or is it other things as well?
Well, I'll be honest with you. I don't think anybody knows exactly what he does. Because when you look at the market, and the market's down a 1%, he'll be sometimes even up. So I don't think we really know exactly what he's up to, and I know that he uses some options. And I haven't read very much about that. I know there was a really long paper that talked a little bit about that. But in general, I would say he does use the DCF. He's looking for a margin of safety, stays within a circle of competence. He's not he diversifies in the sense that he has 62 separate private companies that he owns. But when it comes to a stock portfolio, Apple is over 40% of that. And the top 4 investments are 70% of that investment portfolio. So he's not a big fan of diversification in his stock portfolio. I would say overall, yes, because he has 62 private companies.
Okay. Yeah. But when you own Coke and Burlington and Ameriprise, or on and on and on, right? Or American Express, et cetera, right? I mean, you have to have large enough companies to commit large enough sums, so you're not moving the market every time you're buying and selling, right?
And what's cool about Warren is that he's already done his work on these companies. He knows they're good companies, and when the market goes down, he can put more money to work in them, right?
Yeah.
I know he just did that with Bank of America. He put some money to work with them again.
Yeah.
Because they haven't been doing that great lately.
Yeah. Talk a little bit, if you don't mind. He's incredibly successful, but he's also very humble. He's known for his humility, his personal values. If memory serves, he's still living in the same house that he's been in for decades now, and maybe talk about the traits that have influenced this philosophy and decision making. It's I want to inherit his residence when he passes on. That's and convert it into a Buffett museum.
It's funny because I've been giving some presentations. I was at the last shareholder meeting, and I gave 3 presentations at it. And one of them was a slide of all of Warren Buffett's houses when he was growing up.
Yeah.
So that was kind of fun to talk about. And here's where he lives right now. And he used to have no gate, and now he has this big gate and you can't even see in. And even in Omaha, and that was one of the reasons why he wanted to go to Omaha, is he wanted to get away from all the noise. And he liked Omaha. His family was in Omaha. It's a great place to grow up if you have a family. The values of Omaha, Midwestern, wholesome,
Midwestern values,
honest, all that stuff. And you wouldn't know it by talking to Warren Buffett that he was, what is he now, the 8th richest man in the world or something like that. It doesn't really matter, when you get up that high. He's like your grandfather. He's just a humble guy. He doesn't talk over your head, which is something that I wanted to do in my book. I didn't want to talk over people's heads. There might be one chapter where it's a little bit over the non-financial people's head, but everybody else, it's not an easy read, but it's a good read, good biography / investment / how to be a better person book. But yeah, Warren is, I have a chapter on his mistakes.
Yeah.
In the book.
Yeah.
Which, there's a couple things that I missed out on when I was doing all this research on Warren. One was, the valuation thing. Okay, everybody uses like computers today to do their valuation work and all that other stuff. Well, I'm kind of old school, and I wanted to know how to figure out the valuation of a real world example, because I never saw it in any Warren Buffett book. How do you do it? Show me how to do it. Don't just talk in all these words.
Yeah.
I want to know how to do it. And nobody did that in any of these books. So I did it. I did it in chapter 6, and it took me a long time to do all this stuff and to look at all the metrics that he looks at and to calculate them out and to find them, over a 10-year period, and to look at the percentages, and then to do a DCF formula and put in the right numbers. And I used Apple as the example, and I followed Apple from the first time that they bought it all the way up to 2022. So that was one thing that I was really, really happy with that I did in the book. And usually my friends that are non-financial just kind of, they start reading that chapter because they know it's going to be tough the second time around. And the other thing is I never really saw too much about his mistakes.
Yeah.
And Warren talks about his mistakes. He'll come out, at the start of the Berkshire meeting. I've been to like 12 or 13 of the last meetings, and he'll start them out by saying, "I'm sorry, I made a mistake this year. This is what I did wrong," and he'll tell you about it. So I just decided, hey, I'm going to look at all of his major mistakes, and I'm going to put them in the chapter, and I'm going to use the behavioral bias chapter and try and figure out, why did Warren make that mistake? What bias caused him to make that mistake? And then hopefully we can, as readers, investors, learn from his mistakes.
Yeah. Can you give me an example of one of his biggest mistakes that sort of is top of mind for you?
Well, his biggest mistake, he'll tell you, was buying Berkshire Hathaway. And it was an emotional mistake because his father died 5 days before he actually purchased the company, and the CEO agreed to sell his shares in the company and at a certain price, and then the CEO sent his letter to Warren at 0.125 cents less than what he mentioned to Warren, and it really made Warren furious that this guy lied to him.
Yeah.
And he ended up buying the whole company because of that. And according to Warren, if he wouldn't have bought that company, he would have used that money to buy an insurance company, and which would have netted Berkshire Hathaway $400 to $500 billion more. So that was his biggest mistake. But there's mistakes of omission as well.
That his biggest mistake, the textile company in New Bedford, Massachusetts, is now becomes the name of the company that is now.
Exactly. And I've talked to people about that. They go, well, why does he keep the name Berkshire Hathaway? And some people say, oh, he does that because he wants to be remembered for his mistake and not to do it again.
Quite a story.
There's mistakes of omission.
Yeah.
He could have bought Google at the IPO.
Yeah.
He could have bought Microsoft. But there's the whole issue with Bill Gates and him, and that's another huge
about that. That's another, maybe a topic for another podcast. But actually, let me just ask, because I think it speaks to his Midwestern values that in the wake of Bill Gates' admission of and divorce and et cetera, that it seemed like their friendship frayed a bit after Bill Gates' peccadillos were exposed.
Yeah, I think his omission of Microsoft happened before that.
Right. Before
that, and that was kind of a mess too, because Warren was giving all this money to the nonprofit in Seattle. What was that called?
The Bill Gates Foundation.
Yeah, that's it.
Yeah.
See, I've already forgot about it because Warren never talks about it anymore. But he was giving all of his money to the Bill Gates Foundation. Then Bill dropped off of being on the board, and I think Warren was on the board, and he dropped off of being on the board. And he's still giving a lot of money to them.
Yeah.
But I wouldn't be surprised if he gave money to somebody else after he passed away. It really wouldn't surprise me at all.
Yeah. When you think about his philanthropy, besides Gates, are there other sort of philanthropic ventures that he's involved in that people ought to know about and gives us insight into?
Yeah, there's Girls Inc.
Yeah.
And I gave a talk at the shareholder meeting with the head of Girls Inc. With a bunch of people from China.
Yeah.
That was interesting. And there's another one that's in San Francisco that he gives to the poor. And the name of that, I can't remember right offhand. But there's another one that's in downtown San Francisco. He's been giving money to them forever. And I don't think he's doing the lunches anymore. He was getting all this money from these lunches and giving it to charity as well. At Smith and Walensky's in New York City, they'd have lunch with him, and that's actually how he got Ted and Todd, his co-CIOs, both did a lunch with him at Smith and Walensky's.
Yeah.
But he's doing that. Pretty much he's just giving a certain amount away to the Bill Gates Foundation every year, and Charlie has his own deal that's going on. Warren also has the giving pledge. That's it. The giving pledge, which is, people that are really wealthy will give half their money when they die. Yeah. And I actually have a friend of mine who's a Chinese American who is looking at having some Chinese people join that, which is kind of interesting. And it would be nice to see China and the U.S. become a little bit more closer. And Warren and Charlie talk about that all the time. Yeah, that there's no need for us for the tit-tat. The world would be a much better place if we got along.
Yeah. You mentioned Charlie. Warren, obviously, you mentioned his age a bit ago, kind of. And they've named a successor. Any thoughts about that and what that looks like?
Yeah, I think he should do a really good job. Charlie and they talked about it at the meeting this year, and they said, I can't believe they said it in front of the guy, that you'd really have to be kind of an idiot to screw up what we've built. That's basically what they said. And so, related to, which brings me around to what's going to happen to the stock price when Warren dies. Yeah. Charlie, I'm not as concerned about, because I think Warren is really the person that you have to worry about when he passes away. And so I think the stock price will dive a little bit, but I think it'll come back because they've got that thing. They've figured this out. They've been working on this issue for over 100 years between them to figure out the problem. And I think they've got the right guy in place. They've got a lot of smart people there. And I think in the long term, it should be an okay investment. I don't know about it beating the S&P, but time will tell, right?
Yeah. So if you think about like the most important lesson that investors can learn from his career, and by reading your book, is there one or a couple things that sort of stick out besides discounted cash flow?
Yeah. I would say on a personal level, if you're 20 years old and you went to some of these visits with Warren Buffett, and one of the first things that he would say to us was, the most important decision that you'll make in your life is who you marry. So, I wish I would have known that when I was 20 years old. And so for your young listeners out there, that will help them.
Yeah. And just for point of reference, he's been married to the same woman forever, right?
No, he's on his second wife. Okay. His first wife died.
Yeah. But
yeah. And I like that one. I like let's see. There's another one that I like. Oh, I know what it is. And I say this to my students every semester several times. Hang around with people that love you and care about you, that want you to be successful. And it's easy to get caught up with people that don't respect you or demean you or make fun of you, if you don't have the right mind.
Yeah.
You don't need that. And you deserve better. Yeah. But he he calls it surround yourself with people that are better than you. That's what he calls it. But I call it something else. Yeah. And Warren talks about the importance and the most powerful thing in the world is unconditional love. Mm. And he says, if you've got a couple people that love you unconditionally, you're a very lucky person.
Yeah.
But, professionally, a lot of the things that I said before is, hold for the long term, margin of safety, circle of competence. Those are the main tenets, I think, of the Warren Buffett philosophy.
Yeah. Would you add in brand equity into that discussion?
Oh, definitely. Yeah. Yeah, and what he looks for, the specifics, and the management team and how they're compensated and how do they treat their shareholders and how do they reinvest their money.
Yeah. Well, what do you think is a common misconception about Warren that people you've met, you've had lunch with him now 3 times, you've researched him for this book, et cetera, et cetera. Are there some misconceptions and people just sort of get wrong about Warren?
Yeah, that's funny that you asked that, Bob. Because that was one of the questions that I asked Susie. I had a whole list of questions I asked her, and she said, the thing that people don't understand about my father is how much he cares about people, how much he cares about human rights, about women's rights, the disadvantaged people. And she said, this was interesting. She said that at the dinner table growing up, there was always a disadvantaged person sitting at dinner with them at the table because, another person that influenced his life significantly was his first wife, Susie, and she was really into helping other people. And so she would always have, a disadvantaged person sitting at the dinner table, and Susie's, it was, for a kid to have that's quite amazing to experience that. Think about it. If you were a kid and you had that, being exposed to that growing up, but people don't understand that because, they didn't talk to Susie Buffett.
Yeah.
And Susie, and I talked about that a little bit in the book.
Yeah. You talk about this human side of Warren. I think sometimes people also wonder about his politics and at times what might seem contrary to what a businessman might want. If memory serves, I think he's has never really come out against a wealth tax, if I'm not mistaken, or other things that might be sort of like what you might think a investor businessman would want or not want.
Yes, and he probably could move a lot of his stuff offshore and not have to worry about taxes, right? But he doesn't. He brags about paying taxes. This is how much I paid. Yeah. And if it's lower than his secretary, he'll be mad about it. Right. And say, you guys are screwing up.
Yeah.
So that's the thing that I like about Buffett is one of the things that I love about Buffett is that he's going to be open and honest with you about what's going on. And like, if there's a catastrophe going on, like the Great Recession, he was the guy that I wanted to listen to.
Yeah.
During the
COVID.
I was trying to come up with the word. Sorry.
COVID crisis. Yeah.
He came on and I made sure I hit the record button when Warren Buffett was on, and I could go back and I could listen to what he said over and over again. Don't do anything. Don't do anything. That's what he told us to do. And sure enough, he was right.
Yeah. So
he's often right on these things.
Yeah. Well, he's had the benefit. I once interviewed a gentleman who was a working stockbroker during the 29 crash and still a working stockbroker during the 87 crash.
Wow.
And his advice to me at the time in 87 was, these things go in cycles, And so it was like having a long-term perspective about things. And it seems like, that's the one tenet, right, that successful investors have is they stay the course.
But it's easier said than done, right, Bob?
Yeah.
We can sit here and we can talk about it, but if you're 2 or 3 years away from retirement and your portfolio just went down 25%, what are you going to do?
If you're like most average human beings, not Warren Buffett, you panic. Right?
Yeah, exactly. So I guess what I'm trying to say is that there's probably a different answer depending on each person's situation, right?
Yeah. So, I mean, that may lead to this question about so what advice would you give to someone who wants to invest like Buffett? Is it sort of like to sort of just be, I think at the last shareholder meeting, they talked about not reading the daily newspaper and reading history books and tuning out all the noise, right? It's sort of like, don't worry about the present, just stay the course, right? Is that the message if you want to invest like Warren?
I think I listened to a interview with Howard Marks about 2 or 3 weeks ago, and he was talking about Warren Buffett and his success. And he said, one of the things that Warren does really well versus everybody else is he ignores what's not important.
Mm.
And that's basically what you were just talking about there.
Yeah. So which brings me to this question about the biggest challenges facing investors today. I think about a shrinking public market, right? Fewer publicly traded companies than ever before. The rise of ETFs, both passive and active. The rise of ESG, the rise of cryptocurrency. We're dealing with a world that didn't exist when Warren Buffett was first being taught how to invest by the great masters of value investing. What are these challenges? What do you see as the challenges that investors are facing today?
Well, in a way, you're kind of talking about active versus passive investing, right?
Yeah.
I'll speak for Warren Buffett based on what you just said. If you're not willing to put the work in to be a full-time investor every day, then you should be a passive investor. And he said this, I think, for the first time at a shareholder meeting about 7 or 8 years ago, puts 90% of your money in the SPY, the S&P 500, and 10% in a short-term bond. He didn't talk about that like the first 5 or 6 shareholder meetings I went to. I don't know why all of a sudden he came up and started talking about that, but he did. Yeah. And so that's what I would tell, investors, or, give your money to a financial planner who will help you. And I know my wife, I got married later in life, and I said, I don't want to manage your money to my wife because I know that would, if I screwed up, our marriage would be over. And I am by no means an expert in investing, and I know that, and I'm realistic about that. So we searched for a financial planner. We got one who's really good, and his costs are not very high. It's only like 0.5%, which is pretty good.
Yeah.
And he's a good guy. I trust him.
Yeah.
We both trust him. And we meet with him a couple times every year. I would recommend to your financial planners to, be open and be honest with your clients, be proactive and set up appointments with them, and let your clients know where they stand. And, that's coming from a real world perspective, from my perspective in dealing with financial planners.
Yeah. And dealing with one of the greatest investment minds of all time. That's, you have a unique perch, Todd, no doubt. Yeah.
Yeah. I don't mean to criticize financial planners. I'm just telling you what Warren Buffett tells us, the 90-10.
Yeah.
And he even said when he dies, his wife is going to get 90-10. So if he's giving 90-10 to his wife when he dies, I mean,
yeah, what choice do us mere mortals have?
Exactly. Yeah,
So what are you working on next? Anything fun? You got papers, grants, another book?
I'm actually looking at AI really closely.
Okay. Tell me more.
Well, I'm using it. I think we talked about that earlier.
We did.
I'm using it, and it's making my life easier for everybody out there. I'm doing a PR release on my book, and I just, put into Chat GPT, write a PR release on my new book about Warren Buffett. And it came out, and it was really a beautiful PR piece.
Yeah.
So it could start thinking about using AI in your work, because I think it can really help you significantly and speed up things for you.
Yeah.
And so that's kind of where I'm at. I'm kind of looking at AI and trying to learn more about it and talk to people. But at the same time, I'm trying to learn more about Warren Buffett and his valuation thing, because his valuation thing, I am not 100% sure that I understand everything that he does. And I'm still working on that. That is still a work in progress for me, and I think for a lot of people.
Yeah. Before I ask you to drill down on that, I want to, at the shareholder meeting, Charlie Munger was asked about his views on artificial intelligence, and the quote is, I'll read it: "I'm personally skeptical of some of the hype that has gone into artificial intelligence. I think old-fashioned intelligence works just as good, or just as fine, or some words to that effect. I think old-fashioned intelligence works pretty well."
Yeah. Charlie, everybody laughed when he said that.
Yeah, which is great.
He was the old Charlie. If you've ever gone, I recommend all your financial planners out there, go to a shareholder meeting. If you haven't been one, you are missing out.
Yeah.
It's something that you need to go to.
Yeah. I've never been. I want to go. The only time I've ever met Warren was years ago when he owned stock, and many years ago, I'm talking in the 1980s, when he owned stock in Gillette at the time, before it was purchased by Procter & Gamble. And he would come to the annual Gillette meeting in South Boston, and we got a chance to ask him questions and whatnot. And there he was next to, I think, Coleman Markler was the chairman or CEO of Gillette at the time. And that was my only experience with Warren, was, that many years ago, asking him questions about his ownership in Gillette.
Yeah, he made a lot of money on that.
He did.
Yeah, I'm actually surprised that he sold it.
Yeah.
Because they have such a huge market share.
Yeah. Well, no one's shaving anymore, so there is.
Maybe that's why he did it.
All right. So actually, let me drill down. Let me ask this final question about, so for all the work that you've done and all the analysis about how he invests and how he makes decisions, and for the chapter that you have on the book, you're still learning more about how he does what he does.
Yeah. I'm not 100% convinced that I know exactly what he does. I haven't met anybody that does. Maybe his inside circle knows, a couple people. But I'm not convinced that I know the whole story and how he hedges himself. Like today, I'll give you an example. The market was down like 0.5%, and he was up 0.2%.
Mm.
So, it makes me think, why don't I own more Berkshire Hathaway?
Right. Well, right. There is that school of thought that says, why should I own the SPY when I can own, right, BRK kind of thing?
There was an argument 2 years ago between Warren. It wasn't an argument, but a discussion. Should I own SPY or should I own Berkshire? Between the two.
Yeah.
So Warren took SPY. He said, I think you'd do better with SPY over the long term. Probably because they're too big. And Charlie said, nope, I think you should own Berkshire. Berkshire, he was just convinced that you should own Berkshire. And so last year, Berkshire was up 4% and the market was down 19%.
Mm.
And this year they're underperforming the market. So But, in my last chapter, I talk about they've underperformed the market a little bit previous to last year, but they're probably outperforming, including last year.
Yeah.
So I still think, it's, I can't, I probably shouldn't say, whether to buy it or not, but just look at his track record.
Yeah. Yeah. All right. We're almost, we've almost talked for 60 minutes. Is there anything that we haven't touched upon that you think you ought to mention, or anything that just bears re-emphasizing before we wrap up?
Not that I can think of. I just, I wish everybody the best of luck, and feel free to contact me if you need anything, have any questions, or and I want to thank Bob for inviting me onto the show. It's been nice getting to know you, and nice being on the show. And I think you're doing a service to everybody out there. Thanks, Bob.
Thank you, Todd. And I highly recommend that everyone go on to their whatever bookseller of choice and buy your latest book, because I think there's lots to learn there for our audience, and for not only for the FAs who are listening, but for their clients as well. So, Todd, thank you so much. Appreciate it.
All right.
Thank you for listening to the Exceptional Advisor podcast, brought to you by the Investments and Wealth Institute. If you've enjoyed this podcast, please subscribe through iTunes, Spotify, or our website at www.investmentsandwealth.org/podcast to get the latest episodes of our Exceptional Advisor podcast series. For additional resources, updates on events, and exclusive membership deals, visit www.investmentsandwealth.org.
Join us online for a unique virtual conference experience, Life Cycle Planning. What goes around comes around, taking place on September 19th, 2023. Unlike other events that primarily cater to a select few, this conference is designed to provide strategies that are applicable to a broader audience. Irrespective of age, geographical origin, or the position on the wealth spectrum, attending this event will equip you with valuable insights to immediately enhance the value you offer to clients. Furthermore, we are proud to announce that a percentage of the proceeds generated from sponsorships and registrations will be dedicated to the Investments and Wealth Foundation Scholarship Program. This program empowers women, diverse professionals, and future leaders to advance their careers and make a meaningful contribution to our field. Don't miss out on this opportunity. Register today at iwicentral.org/LCP to secure your spot.